Hey traders, welcome back to another trade. I am long Canadian dollar, Swiss franc again, this time with that fundamental backing to the trade. The fundamental analysis agrees the direction that I want to trade, and you should see a big difference in the result. If you haven't watched the previous video to this one, then please do. It's imperative that you watch the previous video to this one if you really want to learn about price action, if you really want to learn how to take high win rate trades. Then watch the previous episode, then come back and watch this one. So Canadian dollar, Swiss franc, if we look at the monthly time frame here, price has been downtrending. As covered in the previous video, I believe this downtrend is coming to the end. That momentum, downside momentum, is weakening, that we could see some upside or at least a sideways market, that Canadian dollar Swiss franc is reaching its lows. The analysis was all covered in the previous episode, so please go ahead and watch that. On the weekly, big move down. I think we could see the retrace move. I think we've reached our bottom, or are very close to reaching the bottom. Clear downtrend here on the daily. Now on the 4 hour, this move here was all caused by an economic indicator that was released for Canada that has shifted the fundamental analysis slightly for the Canadian dollar. And those economic figures might be what brings this retrace move up. So as covered in the previous episode, I've been looking to go long, but the fundamentals to this point have not agreed with actually going long the Canadian dollar. That may now have shifted, and I don't know if this thing will uptrend longer term. I doubt it with the fundamentals that are backing that directional bias, but I do believe that the fundamentals may be strong enough to actually cause a retrace move, perhaps to hit a 50% retrace level, which is around this horizontal level here. This is a real key level. Look at this for this pair. It's around 71. Just look at the amount of reversals around this level. And if we do get a retrace move, then that's kind of around the 50%, or dead on the 50% retrace level. So that's where I'm looking to get off in this trade. There's a positive swap rate. Another reason why I wanted to go long this pair. But all the analysis to the trade, the technical analysis, the price action, the momentum was covered in the previous video. Now I've been long for a while. Position is in profit. What I like about this 4 hour time frame, going back to technical analysis, momentum, price action, we have this downtrend here, nice clear swing highs, swing lows, which are all coming down, lower highs, lower lows. Price is now forming a higher high. The first structural indicator that the trend could be reversing. We could see perhaps an inverted head and shoulder pattern. We could see this thing continue to move higher. But at the moment, it looks very good for the bulls because we have a higher high. So there's bullish momentum. Something else to look at is the moving averages. So the moving averages were bearish coming down here. They're tightening and they could cross bullish. Now this can happen, such as it did happen here, and not much appears in the sense of upside momentum, even with a moving average crossover. It's just an indicator. It's not guaranteed, but it's a good sign that these moving averages are tightening, that they're likely to cross bullish. If we look where price is compared to the moving averages, when we are downtrending, we're pretty much below the moving averages, or at least below that 100 SMA. We're now above that 100 SMA. We're above the moving averages. So the momentum is definitely shifting. This upside move could be the start of more to come. I'm long. I want to add to the position if possible. These lines going across the screen, these dashed yellow, orange lines, are alerts because these are potential entry areas. They're all based on price action. So if we mark the horizontal levels on the chart, the previous support level here was resistance here. So the other level here, same sort of thing, support, resistance. There's a level down here. So there's three, I would say three key horizontal levels. If we look at diagonal levels, there was this trend resistance here that could now act as support, and we also had the moving averages. So 3 key support and resistance techniques that I use: horizontal, diagonal, and dynamic. Dynamic is the support and resistance that moving averages create. Now if we look at price and moving averages, you'll see that we quite often reverse at moving averages. They provide support and resistance. Not so much when price is ranging, but when we have a trend, you can see that price reverses fairly frequently at these moving averages. So I want to add to this position. If there is a retrace move, it seems that perhaps this horizontal level here combined with moving averages, or this diagonal level down here combined with moving average, could be the most optimal area to get into a position. So when using price action, you really want to combine support and resistance. A horizontal level is generally not enough by itself. It can work out, but generally it's not enough by itself. You want to combine, say, a horizontal level with a diagonal level, or a horizontal level with a moving average, and we can demonstrate that just here. So there's a nice key reversal here. It was around a previous swing low, which was here, and also around that 100 SMA. So this double up, this double whammy of resistance. It generally works a lot better trading support and resistance when you can double up, or sometimes even triple up the support and resistance. You want to have double, twice support, twice resistance. Okay, so I want to go long again. If price comes down, I'll be looking. I've got alerts pending to notify me if price reaches any of these areas of interest. We'll wait and see what happens. You know, the idea is to hold the trade, hopefully up to the 71 area, which is that key weekly area. So to hold the trade to around 71, it may take a number of months unless we get a real shot to the upside, and that's only going to happen if the fundamentals make it happen. I really want to get this across to you in this series, that you have to have some sort of element of fundamental analysis to have a high win rate and profitable trades. Most profitable traders combine technical analysis with fundamental analysis. Even if you love price action, even if you love indicators, and you want to trade Forex, stocks, whatever commodities using technical analysis, having some element of fundamental analysis, even if it's 10% of the trade, 90% technical, you'll see your win rate improve drastically. Fundamentals is what drives the market, is what gives the market its direction. It's really imperative that it's part and parcel of your trading strategy, and most people do not want to hear that because they don't understand it. They think it's very complicated, and it's not. It's as easy as learning technical analysis, or they don't believe in it, which is just total rubbish. You have to believe in the fundamentals. It's the fundamentals that give the price direction. It's not the technicals. Okay. I'm looking to go long. We'll wait and see what happens here. It could be that price uptrends for a while, and then we see the momentum start to shift, and then that would be my signal to get out. So it could be that we don't quite reach that 71 area. I'm trading momentum. If I'm using momentum to get into the trade, I need to use momentum to get out of the trade. This is another area that people fail on when it comes to trading, is they'll use price action or indicators or fundamentals to enter a trade, but they don't use those things to exit the trade. Your exit is as important as your entry. If you're using a logical reason to get into a trade, you also need to use a logical reason to get out of the trade. You know, having a set risk reward at 1 to 3 at some random price just makes no sense. If you're using the momentum to gauge future price direction and you enter a trade based on that, then surely you want to use momentum to get out of the trade. If it works for entry, surely it's going to work for exit. and your risk reward ratio will be so much higher if your exit is logical as well as your entry. Okay, I have said a lot. This video is longer than intended. It always is. I have a lot to teach you. There's a lot that comes out of my mouth. Please like, please subscribe, please carry on watching. There's going to be some updates and we'll see how this trade goes. It could be that this is still going to be another losing trade, because even with some sort of fundamental analysis, there's no guarantee that your win rate is going to be 100%. It's impossible. It could be a losing trade, but these videos are not really there to demonstrate how much money you can make from trading, or look at this amazing trade that I took. They're all about trying to teach you how to become a more profitable trader, or even how to become a profitable trader if you're not profitable at the moment. Follow what I'm teaching you. It will increase your win rate and make you a better trader. I'll give you another update as soon as I can. It is the 18th of May. Canadian dollar, Swiss franc. Nice clear price action here. Inverted head and shoulder pattern, and price is currently forming a swing higher, and hopefully will swing much higher compared to the previous swing high. Price is above the moving averages. The moving averages are bullish, so everything is looking good. The momentum, which is the key word for this series, as well as fundamental analysis, the momentum is up. It's positive, it's bullish, and I'm long, and I've been long since here. I did open a second position down here. If you ever do want to open multiple positions or add to a position, if price is uptrending, the best time to get on is the retrace move before price swings higher. So always try and look to get on the retrace move. And the way I do that, going back to previous things that have been taught in this video, in this series, is price tends to reach moving averages and come off the moving averages. So if you're looking to, say, join this downtrend, simply just entering around the moving averages, doesn't matter where, generally gets you a really good entry price, really good entry area. Now what you can do is combine moving averages with support and resistance to get higher probability entry areas. So I entered a position down here because price was around the moving averages, plus it was around this previous support level here. So that gave me a real key area to get on. So my original position, which is my large position, has been open since down here, and then I've added to the position just here. How do we manage this trade? My ultimate take profit area is up here around 71, around this real key horizontal level, which is also the 50% fib level of this downside swing. There's also weekly moving averages around here, a really good area to get off. It's a technical level where we're going to see some sort of reaction. It seems logical to get off at that area. But what do we do with regard to managing this position in the meantime? Well, what I tend to do is just simply keep an eye on support and resistance, the real key support and resistance levels, and I can mark a number of them just on this 4-hour chart. See, there we go, 1, 2, 3, 4. It's 4 levels here. There was actually one here as well originally, but I've removed that now. But you have these 4 levels, and all I do is simply just take a bit of profit at these levels. So just taking a bit of profit along the way where price may form a swing high and then reverse down. Now price may not reach my take profit area. It may get to this point and then start coming down again. It's definitely possible, especially with the fundamental analysis I've been through in these videos. The long-term fundamental view is not buy the Canadian dollar and sell the Swiss franc, is actually the opposite. The reason why I will close this position early if I don't reach that take profit area, it's all to do with momentum. You know, if we use technical analysis, we use price action, momentum, if we use fundamental analysis to enter a trade, then surely you want to use those things to exit a trade. Another way of putting that is, if you have a logical reason to enter a trade, have a logical reason to exit the trade. So at the moment it's a bit too early because we're just above these moving averages, but if we do get an uptrend here, and then at some point price breaks below both of those moving averages, I'll probably close the position out because the momentum could be potentially changing. So I'm using momentum to enter the trade, but also to manage and exit the trade. At the moment, if price comes down, I'll likely keep both my positions open, because if price comes down now, I think, we could see perhaps a range, and I'm happy to hold throughout a range in anticipation for a potential break higher. Unless fundamentals drastically change, then I'll close the trade down. It could be, if price does come down, that we continue to find support around this area. So it's a bit early right now to say a break of the moving averages is a change in momentum, because there was no upside momentum anyway. This is very early signs of an uptrend. What I really want is a swing higher, some sort of pullback, and then we'll have like this structured uptrend here, and then a move below the moving averages then might be, depending on what else is going on, might be what makes me close that trade out for profit. But let's hope that things uptrend at least to, say, 68.50 up here, maybe even higher, 69. That would be great. 69 is a real key level up at this area here. We'll wait and see. Things continue to look very bearish, and the momentum is definitely down on the daily. The other time frames, though, are suggesting upside. So we'll just wait and see what happens with Canadian dollar, Swiss franc. A nice swing higher on Canadian dollar, Swiss franc. This is exactly what I wanted to see, and price may swing even higher. But this looks like it could be the start of a retrace move, but time will tell. I've marked my original entry area. I've marked where I added to the position, and these red arrows show where I took a slither of profit. So as mentioned in the previous update, I'm just going to take a sliver of profit at each of these horizontal levels until I reach my take profit area, or I'm stopped out for profit. So you can see how effective this is. I had this horizontal level marked based on this big swing here. I've taken a bit of profit, and it looks like other people are doing the same, or starting to enter short positions, because prices stalled around this area and starting to calm down. My stop loss has been adjusted to below this swing low area just down here. So really it's all about managing the trade by taking small profits at key areas and just trying to follow the trend with your stop loss. Now it's tempting to perhaps bring your stop loss below this 50 SMA or below this swing high here, but that's just too tight. If we look at previous trends, if we find an uptrend like this one, the clear place to put a stop loss is always below the swing low. It's really safe, and it's usually triggered as the trend breaks. So I'll keep my stop loss below that swing low, and it could be that this is it, and price is now just going to come down, and that was the trade. But I've taken some profit at the highs here, and it just helps with the emotional side of things too, just taking a bit of profit. But the key is really to hold the majority of the position open throughout the duration of the trade. That way your risk reward is going to be so much better. I don't know when I will update you next. Either when price comes down and stops me out, or perhaps we reach this next take profit area up here. But things are looking good, and I'm happy with the trade so far. Going back to why I entered this trade from a technical analysis perspective, all to do with the momentum, weakening downside momentum, or potentially weakening downside momentum. We can use that same technique for closing the trade. You may have to go back and watch the previous video to this one, but we looked at momentum, things like swings and moving averages, to predict where future price might be, to analyze the downside momentum and how strong or weak that momentum was, and the potential upside that was coming. We can now look at this recent price action. We obviously have higher highs, higher lows. Everything was looking good up until about this point. So this swing low was close to this one. Since then we've had a lower swing high. We have like this head and shoulder pattern, shoulder, head, shoulder, a lower swing low. We were above the moving averages here and we're now below them. The moving averages were bullish, they were moving up. The green was above the red, the faster above the slower moving average. They're now tightening and moving sideways, could potentially cross again. That upside momentum is no longer there. That bullish move has run out of steam. So at this point, I would consider closing the trade down, and 99% of the time I would close the trade down now because the upside momentum is gone. I use momentum to get into the trade and I use momentum to get out of the trade, or momentum analysis to get in and momentum analysis to get out. I'm going to keep this trade open though, just for a bit longer. I really think this has a lot of potential. What I have done is move my stop loss below this area. So it'll be a very small loss for the second position that was entered with this second green arrow. With the positive swap rate over the last couple of weeks of holding that position, it really is quite a small loss. And then obviously it's going to be a win for the position entered down here at the beginning of May. Yeah, beginning of May. I think there is a chance that price may become indecisive, and I may have mentioned this in a previous update. You know, it could be that we see price now move sideways for a while, so my stop loss is down here. I then expect price to break above the resistance and start uptrending again. That's the hope anyway. If price does come down, it's a winning trade. You know, I don't have much to lose at this point. I'm happy to hold on to the position. Canadian dollar, Swiss franc is off again. We've broken recent highs. We're currently above this horizontal resistance area, which was an area where I took just a slight bit of profit. My stop loss was below this swing low. It's now below these lows here, so I've locked in just a little bit more profit. We're above the moving averages. The moving averages are starting to become bullish again, so it could be that price is going to take off again and start uptrending. The structure is holding. You know, we're not getting lower swing lows, lower swing highs anymore. We've actually broken higher. Hopefully price now reaches this next horizontal resistance area. I can take a bit more profit off the table. But if price comes down and closes back below those moving averages, then I'll likely just close the trade out, because there just isn't enough upside momentum. And that's what I'm looking for, is upside momentum, evidence that there's more buying power than selling power. The fundamentals continue to be good. If the fundamentals change, I'd likely close the position out or adjust my stop loss or take some profits. The move yesterday was caused by some positive figures for Canada and negative figures for the Swiss franc, believe it or not. So hopefully the fundamentals continue and price can move another 100 pips up to this next take profit and resistance area. Nearing this next resistance area, so I've taken some profit this morning. Once again, just a slither, but we'll mark that just around this sort of area. Happy with how things are going. I'm expecting a retrace move at some point. We may even retrace this previous resistance and then bounce off, or retrace to a moving average. But things are looking good. Really happy with this uptrend. Nice, clear, higher highs, higher lows. Moving averages are bullish and coming up. As mentioned in previous updates, I'll keep closing part of the trade down until we reach the overall take profit area, which is up at this level here. Price is actually at this level now, so I'm going to take just another slither of profit. Let's mark this so it's recorded. So just around here, we're at this horizontal resistance. So once again, just a slither of profit. You know, you really want to keep the majority of the position open for as long as you can until the momentum shifts. And I think I've reiterated that a number of times in these updates. It's hard to remember. Another sliver of profit taken. I would say the previous swing low is here, moving averages are coming up, it's all looking good. Once again, if price does now come down and close below those moving averages, I'll close the position out, but at least we've taken some profit at these highs here. Next level's a bit higher, I may even skip that level and see if we can get to this one before taking a bit more profit, but ultimately we're looking for this level here, so we're about halfway there, just over halfway to my ultimate take profit area, and we'll wait and see if price can actually get there. So Canadian dollar, Swiss franc has now been closed. Price has just broken below this 4-hour 100 SMA. I've changed the colour scheme in my charts since my last updates, that's why things look a bit different. The arrows are still here though. Price is closed below this 100 SMA. To me that signals that upside momentum is perhaps coming to the end. If we look at the price action, we can also see these swings are just not really climbing, just like they were over here. You know, look at these swings over here compared to the most recent swings. We're not really going anywhere. Have a look at this sideways market. It could be that price is going to move higher after I've closed the position down. It does do that. But that's my trade from beginning to end. Let's put another arrow in. Happy with that. Time to look for the next one.